Welcome back. This is Corporate Radar. Well, it's time for our special segment, Quarter Se Quarter Tak, where we bring you expectations from each sector. Today, Sonal joins us to throw the spotlight on the second quarter expectations from the chemical sector. Sonal, over to you.
Thank you so much for that. Well, it's going to be another subdued quarter for the specialty chemicals players as the demand scenario has not yet improved. In fact, especially in the agrochemical end user industry, that's where we continue to see big pressure. But do remember, YOY base is low for most companies, so that number will look slightly higher. But it will be important to watch out for guidance outlook for FY25 because remember, Aarti Industries had already cut its guidance in its first quarter earnings call, and Kotak says now that SRF may find it challenging to meet the 20% plus growth guidance as well. Now, other key issues have been Chinese dumping leading to pressure on margins. The second one has been continuous destocking of channel inventory and delayed purchase decision of customers as well. Also, the export environment has been relatively muted for most sector players. As per Jefferies, SRF will report another weak quarter on subdued chemicals where chemicals EBIT will decline 19% on a YOY basis. Packaging films EBIT should see a sharp 15% recovery. Technical textiles EBIT will be steady with EBIT down around 4% on a YOY basis. For PI Industries this time, CSM export revenue should rise 10% while domestic revenue should remain subdued, which is expected to decline 5% on high channel inventory. Coming to Navin Fluorine, 18% growth in revenues is expected, which will be aided by pickup in exports this time around of two chemicals. One is B32 and the next one is HPP as well. If we talk about specialty chemicals revenues, they should remain flattish YOY but see 15% sequential growth. Let's talk about the agrochemical sector now. The domestic agrochemical industry is likely experiencing a soft quarter again due to uneven rainfall. So while industry conditions in the global agrochemical market remain depressed amid Chinese oversupply, these two will continue to be under pressure. Let's end it with the valuations. Stocks have corrected quite a bit, but some of them are attempting to make a comeback. SRF trades at 19 times. We have Anupam Rasayan at 26 times. Deepak Nitrite at around 34.5 times. Gujarat Fluorochemicals is expensive. The stock has been doing well. Valuations have been around 45.5 times. Aarti Industries at 27 times. And Navin Fluorine is trading at 35.5 times.
Okay, all right. Thanks a lot for that, Sonal. Well, let's get in Ranjit, the Vice President of Research, Agri-Chemicals and Midcaps at IIFL, who joins us on the show. Hi, Ranjit. Good morning and good to see you as always. What are your key expectations from the past quarter and the way ahead for the chemical space?
Yeah, thank you, Nigel. Good morning. As Sonal kind of clearly said, we are expecting a divergent trends for the chemicals. So we put that into 4 different buckets. The companies that have a higher exposure to the global agrochemical space will definitely see the pain continuing. The domestic agchem space is what we are seeing a bit of a momentum fizzling out. The plentiful rainfall that we have seen this year has led to a bit of a skipping of sprays by the farmers, and that is what the consumption has been a bit subdued. On the discretionary sides, there have been divergent trends as Aarti Industries withdraw the guidance. But we do see the other chemical companies like Atul should continue to deliver a good numbers on a YOY basis. Coming to the bulk chemicals, PVC pricing has kind of a corrected quarter on quarter, so that will have its own bearing on the companies. While phenol spreads have been largely stable, so that should kind of lead to a stable earnings by Deepak Nitrite. So overall, it's going to be a mixed trends. We are not yet seeing any meaningful improvement on the recovery part, so we have been maintaining the cautious view on the chemical space. So that states, but it's going to be a more of a bottom approach for at least for next 6 to 12 months before we are likely to see a bit of a structural turnaround.
All right, so it could be stock specific then. If you have to call out a couple of positive surprises that we could brace ourselves for, which ones would they be? Which are the stocks in focus that could surprise positively?
For the 2Q, we do expect a bit of an outperformance coming in from companies like Atul and Deepak Fertilisers, where we see the base being favorable. And the end dynamics have kind of an improved for these 2 companies.
All right, Ranjit, Atul and Deepak Fertilisers. All right, we keep an eye on that. Oh, Sudarshan Chemicals, big deal is what they announced, I think just on Friday.
Right.
What is your view on the deal and your view on the stock post this deal?
If you talk about the deal, clearly it is optically quite strong. It kind of catapults the company to almost a second largest pigment player. But what we have seen in the past is that the global M&A takes its own sweet time to kind of a turnaround. We do believe that those assets, at least specific in Germany, are under stress. And to that extent, making a turnaround would be to that extent challenging. We have heard from the global companies like BSF and the European companies that competitiveness of the Europe as a region has been kind of a waning out. So it would be interesting to see how Sudarshan would be able to kind of a turn around those assets. So it's going to be a tough road ahead for them. If they are able to pull that off, then yes, there would be a value in the stock. But we do believe that it will take a bit more time for them to turn around that.
Okay, all right. So you have given us your earnings surprises that we're looking at. Just hold on to that thought, Ranjit. We have some news that's coming in there from industry sources. They say that city gas companies could raise prices after the 20% cut in APM gas allocation. So they are talking about another price increase if in case that allocation goes down for them, then they'll have to buy from the spot market. And because of that, they're saying that there could be a probability that they go ahead and increase prices by around 20%. I think we should get some of those flashes up for you on the screen. So the street was fearing that there could be a cut in allocation. Now industry sources indicate that the CGD players, they are saying we are going to go ahead and increase prices itself by close to around 20%. So that's the source-based information that's coming in there. MGL, IGL and Gujarat Gas, I think the last few sessions, they've been a little bit nervous because of the cut. But now as we speak, I think IGL as well has almost moved into the green. So big up move is what we're seeing from the low point of the day. Sapna's the one that's bringing us this information. She'll join in and run us through that, and maybe Sonal will join us for a quick analysis as well.
Nigel, just 2 points. One is the fact that, so price increases to offset the higher prices.
Allocation.
So maybe the fear was that maybe demand will take a hit. So if prices go up by, I think, in rupee terms, about 4-5 rupee price increase, right, is what was being expected. So maybe some demand hits or, demand for CNG goes down. So that's why stocks were a little nervous. But second, and I think more important, is that if you look at estimates, global estimates, LNG, there is expected to be a gas glut globally into 2025 onwards. So if you look at forecasts for what LNG prices are going to be, I mean, they are way lower. Will it be as low as $6.5, $7, which is where APM prices are? We don't know. But, it's a very cyclical market dependent on incremental supply. And in that sense, I mean, expectations are that, it's going to be a lot of natural gas production over the next couple of years or so. So I just wanted to put those 2 points on the table. For now, I think that cut happened over the last couple of days because there was this expectation. And now that the news is out in terms of still industry sources, I think stocks are steady. I mean, not doing very much, still down about 1.25%. Look at the market as well. And, while we've been talking with Bajaj and L&T